Greetings, everyone. Good morning, good afternoon, or good evening, depending on where you're joining us from. My name is Nisha Singh, and I'm moderating this webinar today on understanding the financial needs of female smallholder farmers. We are going to get started right on time because everyone's time is valuable, and we only have an hour and a lot to get through. Just as an introduction, this webinar is hosted by the Women's Financial Inclusion Community of Practice at CGAP, and I facilitate the Social Norms Working Group. We have 3 working groups within the Community of Practice, one focused on data and measurement, one focused on technology, and one focused on social norms. Within the Social Norms Working Group, we're focusing on how understanding the role that social norms play in women's financial inclusion, and also where there are opportunities to learn from other sectors in terms of changing normative behavior to enable women's financial inclusion. We host regular webinars, events, regional meetings, and share lessons learned and document best practices to all working towards the goal of financial inclusion for women globally. As a part of that, we're focusing today on female smallholder farmers. We have a very impressive lineup of speakers, and I'll introduce them one by one. We have Emilio Hernandez from CGAP, who leads their work on financial innovation for smallholder families. He provides technical guidance to better understand financial behavior of smallholders. He's going to present on a recent CGAP publication. We will then have Maureen Quilasa from CARE. She's a technical advisor on financial inclusion for Southern Africa based in Dar es Salaam, Tanzania, and she currently heads CARE's efforts in Southern Africa to capitalize and scale savings groups as a platform to increase food and nutrition security. And then our third speaker is Christabel Makoka, who is the country director for Mercy Corps' AgriFin Accelerate program in Zambia, and she will be sharing the work that they've done around understanding female smallholder needs and designing financial products for them. The reason we decided to do this webinar, and this topic is of importance, is there's 1.5 billion smallholders globally. 50% of them are women. And women spend about 40 to 60% of their productive time in agriculture. So it presents a huge opportunity in terms of providing them with appropriate financial products and services that can then help reduce poverty, improve food security and nutrition for their families. Just a couple of housekeeping things before I hand it over to Emilio to get the webinar started. For your questions, please send them through the chat function and send it to all participants so that everybody can see. We're going to spend about 35 minutes with the speakers and then do a Q&A for about 25 minutes. And then we will wrap up. So we've left plenty of time for your questions, and you can send your questions as you think of them, and I'll keep track of it. This webinar is being recorded, and we will be sending out the full recording and the presentations after it's over. So with that, I'm going to hand it off to Emilio.
Thank you very much, Nisha. Welcome, everybody. It's a pleasure to be here. I've been asked to share a bit of the deep insights that we've been trying to collect and analyze here at CGAP about smallholders, in particular female smallholders. So what I'll be presenting is a short summary of the work we did, which is published in the cgapwebsite.org, and at the very end of this presentation you'll find the links to both the article we published plus all of the digital annex with a lot of statistical analysis that we did to come up with the results. So to get started, Let me introduce you a little bit about CGAP's Financial Innovation for Smallholder Families initiative. Basically, the goal was twofold. It was to really improve our understanding and the evidence base around smallholder demand of financial services. And we did that through the analysis of 6 nationally representative surveys in 6 countries: Tanzania, Mozambique, Nigeria, Uganda, Cote d'Ivoire, and Bangladesh. And we also did 3 financial diaries in a smaller subset of smallholders in Tanzania, Mozambique, and Pakistan to get a bit deeper evidence on the financial transactions that they did. And this survey work, we did it throughout 2013 and 15. You can find a lot of our publications analyzing different aspects of these surveys in our website. But another part of the work that we've been doing is working with providers to translate those insights into some impact, working with financial service providers to develop better products and better delivery strategies. So today I'll be focusing a lot on the work we've done looking at particularly female smallholders, right? Just to say that, well, like Nisha hinted, I mean, the main motivation for this analysis is because, well, we realized that if, you know, all the focus on enabling financial inclusion for smallholders is driven by, you know, the mounting evidence that it's an enabler for agricultural development and food security, and this leads to significant poverty reduction. However, if we're really going to achieve this at scale, we need to make sure and have evidence of the fact that if female smallholders are part of this inclusion process or not, and if not, try to discuss why and what we can do about that. So when we analyze the data that we have for smallholders in Tanzania and Mozambique, we find a very nuanced picture. It's not enough to just compare women and men within smallholder households. We had to break it down by income levels to start getting a more clearer picture of what's happening. What I'm showing here is the main upshot of the current situation that we find in smallholder families. Basically, as the household, the smallholder households, improves its income level or its wealth level, what we find are very diverging paths between men and women, where basically the financial, the gender gap in financial inclusion widens. So what I'm showing here for the case of Tanzania is that all those households that are in the poorest quintile of our analysis, those depicted by the circle that shows 1, these are households that are quite poor, and they have both men and women are basically excluded from formal financial services, and they're also very, very concentrated in agricultural activities. As the family and the household wealth levels improve, what you find is that men are able to diversify a bit more away from agriculture. So more and more men claim that their main job is not farming. Their main income is coming from non-farming activities. And that rate of diversification is much, much lower for women. And that gap becomes largest actually in the wealthiest households. So that was an interesting nuance for this particular segment. And we proceeded to really understand, okay, if that's the case, you know, what are the kinds of financial transactions and the frequency of those transactions between men and women? So we looked at mostly credit and savings products, and what we find is that in terms of the number of financial transactions that women and men do, they're pretty much the same at all income levels. So even for the poorest smallholders up to the wealthiest smallholder households, we find that the financial activity is very similar between men and women. There's no significant difference between the two of them. So both of them are using loans and both of them are using savings. So we need to look at the sources of those services. And this is where we find a big disparity, because as we hinted in the previous graphs, as the household gets wealthier, men are able to start using formal financial services for the credit and savings transactions, whereas women lag behind in that ability and just use more intensively in the wealthier households those informal financial tools that they have, like reaching out to family and friends, community savings and credit groups, and money lenders and the sort, right? So why is it, that this happens? What prevents formal financial service providers, even in the for the wealthier smallholder households, to serve women? Because basically what we're seeing is, even when wealth conditions improve, it's only the male members that overcome financial inclusion constraints. So trying to answer a bit the question why, we reach out and we look at the the evidence that a lot of people have been working on it, and for this we really worked very closely with our colleagues at the Food and Agriculture Organization, who also co-authored this paper, to kind of merge the evidence out there and give a framework that explains why is it that women smallholders seem to be lagging behind. Well, first of all, some of the key links that we make is that, and the evidence that we find is that female smallholders lag in many other indicators beyond financial inclusion. They lag in education, in access to IDs, and in agricultural productivity. And we know from the evidence out there that these at least 3 indicators are determinant of whether anybody, whether male or female, can actually find it useful to use formal financial services, and where providers are able to look at them and consider them worthy clients, right? So that's another constraint that female smallholders have. And the literature suggests that these lags are related to social norms. The fact that societies believe in one way or another that it's not so important for females to get educated, or they don't really need access to IDs, or they don't get exposed to the agricultural practices and the agricultural marketing dynamics in the community because that's not a woman's role, right? So that is, one dimension that we see is affecting this outcome. The other one, also related to social norms, is the issue of time poverty, meaning that even when women, do find, let's say, an investment opportunity that is profitable, and they actively look for and even, could get formal financial services, they may be very constrained in terms of the time, how they use their own time and how they use their own resources to make those investments, because they are assigned a whole lot of other functions like taking care of children's household chores, among other things, depending on the culture, that take their time away. And it's not so easy for them to just drop those activities, because if they don't do it, probably nobody else will, or probably there are social repercussions if they do, right? So that's another limiting constraint that also limits both the value of using formal financial services and also their willingness to look for them. But another reason, and this really goes more towards the financial service provider space, is that these providers are usually unaware of some of the female smallholder financial needs, and they could tweak and tailor their products better to meet those needs. And for that, to try and get more insights on what are the specific financial needs that women have in these households, we rely a lot more on financial diaries, which are not nationally representative, but they give us a sense of what are some of the differences that can exist between men and women in smallholder households. And we come up with at least 4 different features that are consistent in Mozambique and Tanzania. One is that the goals and aspiration driving expenses and the use of financial services for women can be different from men. We see that the expenses priorities of women concentrate very much in groceries and food, in children's education, in clothing, and transport service. A larger share, a relative larger share of their expenses concentrate in those categories compared to men. So if we design financial services that help them achieve those specific goals, that would be a way to increase uptake of formal financial services for the benefit of women. The other feature that we see is that it's very important to time the delivery of services for women, because the time when they need it can be very different as men. And when we look from a financial service standpoint at the household without distinguishing those differences, we may believe that the whole household needs this type of product or another type of product at this particular time, where it may not be the case for individuals within that household. So for example, the moments where women have cash and liquidity versus the moments that they don't are very different from those of men. So when you request a deposit for a saving plan, is critical whether a woman uptakes it or not. When you request a repayment of the loan, or even when you make the disbursement of the loan, makes a big difference in terms of value for women. The other is the desired term structure. One of the things we find consistent is that women have longer periods of liquidity than men. That means that throughout the year, they have very few moments of having cash income, inflows of cash coming into them. Most of the time, they're really on the red or have very, very little liquidity. So that gives you an idea of the term structure. It's likely that financial products like credit and savings that are longer term really match better the cash flow that you see for women. But the puzzling and the contradictory thing is that when you see the type of financial service that they're currently using from informal sources, they're very, very short-term credit. So they palliate that situation by having a very high turnover of credit and savings plans, because what they really need is longer-term savings and credit plans, but they don't get it either from the informal sector or the formal sector. Then the other aspect that we see is that there may be different product preferences, and this is very context specific. So one of the facts that we see in the financial diaries is that women tend to use more informal savings than credit. So there seems to be a preference for savings. What we cannot really distinguish very well is that whether this is the result of women actually preferring savings over credit, or the fact that the right credit product for them is not available. So they rely a bit more on savings for that. And it could be both ways. It could actually be that in some contexts, women do prefer savings because they're a bit more risk averse, and the type of ventures that they do, they're not very well set up to cope with risk, so they prefer relying on their own savings. But in other contexts, it may be that they do prefer credit, but it's not available to them. So to conclude, using a gender lens in the analysis of smallholder financial behavior is quite important, because it reveals how that rural expansion that financial institutions are making progress towards has not automatically reached female smallholders, and we need to understand why. If providers use a gender lens, they can recognize important unmet financial needs, and they can get insights on how to tweak their financial products and their delivery strategies to be able to get to women. And this is true even in the wealthier smallholder households, where you find a lot of the male members already financially included. But one thing is clear, though, that even if we do a lot of investments with financial service providers in better products and better strategies, we are also going to need more than that. We're going to need to be able to design multi-sectoral policies that can address the discriminatory social norms that prevent women from having higher agricultural productivity or a productivity in general, whatever venture they do, even if it's a non-farm. that allow them to have better education, access to IDs, etc. And what we'll be discussing in the rest of the webinars are some insights on how to achieve both those improvements in financial product design, as well as gains when it comes to changing social norms. Thank you very much.
Thanks, Emilio. And as I said, you can type in your questions as you think of them. We're now going to transition and hear from Christabel, who works with AgriFin Accelerate in Zambia, about how they're understanding the financial needs of female smallholders. Christabel, I think you're the presenter now.
Great, thanks, Nisha. Just a quick background, I guess, on AgriFin Accelerate for those who don't know. It's a program under Masiko, and we work in Kenya, Tanzania, and Zambia. The goal of the program is essentially to increase access to financial and non-financial services for smallholder farmers by working with partners, so whether that's private sector partners or government or other social sector actors, but we work primarily through partners. The background of our present today is I'm looking to understand, we're working with a service provider a financial service provider in Zambia, and we're keen to understand what are the channels that we can use to actually reach smallholder farmers, specifically women. And village savings and loans associations, we know that they've had that and wanted to look at that as an entry point for a private sector actor to essentially reach smallholder farmers who are in rural areas. And so we used human-centered design research essentially to understand financial behaviors, needs, and pain points of women, as well as what relevant products and channels exist that a telco or a bank that is looking to target that group can essentially use. So a lot of the insights are very similar to what Emilio presented earlier on. And essentially we use three tools. One is what we call the household seasonal map. And this just explores from January to December, whether it's agricultural practices or essentially any form of income generating activities that the women are involved in throughout the entire year. Then the second exercise we do is an ecosystem map, and this is essentially trying to understand the relationship that the women smallholder farmers have with various stakeholders, identify what touch points are actually critical as they're introducing a product. You might be able to design the perfect product, but without identifying the right channels or the right touch points to use, the product is really taken up. So we wanted to explore that. And then lastly, we did a few feature testing with several prototype products and services are women most drawn to. Is it credit or loan, as credit or savings, as Emilio was alluding to? And if it's savings, what kind of savings, when are they saving the most, etc. So I'll just walk through a few of the insights that speak to each of those methodologies. And the first one is on the seasonal map. Essentially, this, as I mentioned earlier, highlights the financial behaviors of women farmers, including what strategies they use to manage their cash flow. I remember when we presented this to actually the financial service providers, it was very eye-opening for them because they don't spend enough time with the end user to actually understand when are they getting money, what are they spending money on, when does it make sense to introduce a product. So, for example, we know in Zambia, and I think probably a few other African countries as well, you only have one planting season. And so as you're thinking through introducing a product, for example, an input credit product, timing it right is important, otherwise you lose an entire year if you're a financial service provider. So I'll just walk briefly through a few points that were interesting in this slide. We know that in January, for example, between December and January and February, those are the driest months for not just women, but actually the entire household. They've been planting from October to December, and so the next 3 months are very dry. And so we were curious to understand what other income smoothing strategies are they using, and it turns out they would grow crops like sunflower, for example, because that's a crop that takes only about a month to mature, and so then they're able to sell it in the field. That's sustainable. So we understand that that's a dry month. When we were thinking about how do you introduce the right product, we know that somewhere around April, May, June, that's when they're harvesting and selling and actually getting paid. So what then that's translated into, as we're talking with the banks and the telcos, is suggesting that if you're introducing a savings, it actually makes more sense to ensure that it's launching somewhere around April or May, because then you're likely to get people actually to take on a product that requires for them to save. Introducing it in January when no one really has any money doesn't make sense, especially since the household is very dependent on agriculture. Then when it came to credit, then proposing aspects of credit, like introducing it somewhere around October, because that's when they're starting to prepare their land and actually looking to farm. So in summary, what this slide allows us to bring up as we're talking with service providers is it's not only important to have the right product with the right terms, but actually when you introduce the product really does matter. And I think Emilio alluded to that as well. The next slide, essentially this is looking at the women smallholder farmer ecosystem. And by that we mean, what are the relevant touch points? So who do they trust the most to get what kind of information? And I guess depending on where you lie, either shockingly or not shockingly, when you look at who's closest to them, it's people like the village agents who introduced the whole village savings and loans associations to them, that were probably the most trusted. Then you have other people like extension officers who are most looked at for giving them advice on agronomy and when to plant what. Other formally established institutions like banks, government, even NGOs are much further in the outer circles. And so what this led us to start thinking is, yes, you have the right product, who's the right touch, like the village agents, community leaders. They become actually very interesting for a telco or a bank to recruit as a brand ambassador, because then they're able to really drive the uptake of products and services. The last aspect that we looked at is not every woman smallholder farmer is they have very different issues that are driving their behavior, and so I wanted to understand a little bit about their segmentation. And the other piece to it is, I think financial inclusion in and of itself shouldn't be the end. So if we have 100 women who've gained access to credit, then the question is, so what? If someone credit and not able to repay, then it means if I've pushed for them to actually gain access to credit, I've left them in a worse off position than I found them. So we started exploring this concept of financial health. How do you identify the right metrics that allow you to actually increase the financial health of women? And so it moves beyond just. And so the 4 metrics that we're looking at, one is on how well is a woman able to build and maintain their reserves to mitigate economic shocks? Are they able to plan and prioritize? Do they have access to a range of financial tools, not just one financial tool? And then lastly, can they manage existing debt? So debt in and of itself is not bad, but are they able to manage their debt? I won't go into all the criteria, all the personas that we looked at, but we ended up with 4 personas. One is the entrepreneur, the other one is the restrained hustler, tried and true, and then the breadwinner. What this allows us to do is, as we're talking then to service providers, is as they're coming up with marketing strategies, really tailoring the language to understand which of these 4 personas are they trying to sell to at what time, and what products should they be looking at. So for example, the entrepreneur is someone who is currently already saving a little bit, is probably a leader in the community, understands how to manage their own financials, but they need access to a higher, like a loan size that's bigger, for example. Whereas if you look at someone who, if I can just go back, who's in this bottom right corner, the burden breadwinner, that's someone who introducing a loan to them actually ends up leaving them worse off than they were, because they're not able to then manage it. So the segmentation allows us to talk to service providers from a marketing perspective to understand how do you message this. In summary, there was a lot of information that we really found coming out of the research, but I think they center around 3 areas around products, channels, and training. So with products, I think what we are finding is, while the products, financial products in and of themselves might not look necessarily different. I mean, a loan is a loan is a loan, whether that's going to a man or a woman. It's important to start thinking about designing products to ensure they're aligned with the needs for women. I think Emilio alluded to this, that when are women smallholder farmers actually needing credit, for example, to plant? They're mostly the ones who are taking of household needs, so school fees becomes important. So when do you ensure that they're getting access to this product? Product examples that came up, for example, really strongly is aversion towards credit as compared to men. Can we explore a lay-by option for ensuring that women farmers actually get access to the inputs that they need, but not through credit necessarily? The second one is on channels. So what touch points are very close to women smallholder farmers? And as I mentioned earlier, cooperatives, agro-dealers, and village agents were listed very, very high as people who women trust to get information from. And so for the telcos that we're working with at the moment, we're pushing them to really recruit beyond having their own agents, actually recruiting brand ambassadors that are then able to speak to rural areas and drive uptake of products and services. And then lastly, training was listed as something really, really important, both promoting financial, digital literacy, and agricultural practices. One of the things that really stood out clear is for women farmers, we are finding they really, really wanted in-person training that's trusted community member, otherwise it's not seen as something that's targeting them specifically. So I'm right out of time, but I think one of the things that we're now doing is with a service provider that we're working with is, of all the lessons that we've learned from how a village savings group was structured, from the product design itself, what channels the village savings groups picked, and how the training was conducted, we're looking to see how do you adapt those same skills to then design a mass market product that you can allow to scale beyond the group approach. And so that's what we're working on at the moment. Nisha, I think I'm going to stop here.
Thank you so much, Christabel. And that's the perfect transition point to hand the baton to Maureen from CARE, who is going to talk about how CARE is working to address some of the underlying issues around norms and women's access to markets. So Maureen? Maureen, you need to unmute yourself.
Thank you for that. I was actually speaking while muted. Thank you, Nisha. And I'm happy to have come third after Amelia's and Christabel's presentation because it's sort of a step back. What I'm going to talk about today is how do we design a solution, particularly in this situation will be for marketing, that will include as many women, but also prepare women to for more formal financial services in a large sort of meaning of the word. And I'll talk about that. I'll explain what I mean by that at the end of the presentation. So essentially, I'm going to talk about a methodology that we used that started with programming in southern Tanzania, where we were implementing 2 parallel projects around the sesame and cassava value chain about 8 years ago. Yeah, about 8 years ago. And one of the biggest challenges we saw at baseline, so talking to women, talking to communities before introducing the program, we saw that the norm, like many other places in the continent, is that women worked on the farm and men sold. And this produces a lot of challenges in terms of women's investment in the land that they are working, in the crops that they're producing. And so we were tasked to design a program that would increase productivity for both men and women, but also would see women participate fully at all levels of the value chain. And these are some of the things that we implemented, and I'm just going to share them briefly, and I'm going to zoom in on, sort of narrow in on the first one on how we worked with collectives. And so, of course, the first thing that we did is we worked with collectives, and this was different. So we worked with village savings and loans associations, and very closely related to those, we helped the community organize themselves into farmer-producer groups that were relevant to the value chain that they were working with, and cooperatives. And so we use these groups as platforms to deliver extension services and skills training. Another thing that we did was sort of working to make sure that we understood the value chain market, but also the men and women that we were working with also understood, the value chain, particularly the markets, and helping them produce for the market particularly. And lastly, it was deliberately engaging men and leaders, particularly the elites within the community, to shift social norms. So I recall a lot of conversations where we had men in a room and we talked to them about gender and the importance of women participating in economic activities. But as I said, I am going to zoom in on one of these areas that we worked with, and that is creation of community marketing research committees. And so we thought just getting the communities into farmer-producer groups would be enough. That we would provide training, we would provide business skills training to these groups, and they would be able to kind of buy inputs and then work their way down the value chain with the assistance of extension workers. But by the end of the first year, we realized that not much had changed. We had encouraged more women to participate into in the value chains, but then it was largely the men that were selling. Even worse, because productivity had increased, it means that even the opportunity that the women had to sell their sesame on the side of the road, because they only really had a bag, they produced a bag, so they could, but now you're talking about producing 12 bags, 15 bags, and these need to be taken to the market. But the challenge was women were not able to go to the market, largely because the community we were working with had challenges with mobility, particularly for women. And so we worked with the creation within these producer groups. We had a number of different groups coming together and selecting a marketing research committee. And this marketing research committee is essentially a group of 7 to 8 people, encouraged to have a women's majority. And essentially most of the groups that we worked with had at least 5 women, within those groups. We had some that were all women. And these would represent maybe 4 to 5 groups, so about 100 farmers sometimes, depending on the size of the groups. And this group would be charged with talking to buyers and negotiating prices, and on the other side, aggregating on behalf of all the farmers they represent. And so these groups particularly received additional training on market facilitation, finding the right buyer, talking to the right buyer. And what was really interesting to watch was, particularly for the women, it was more of a challenge because it was something they had never done before. But also, this is where having a larger proportion of women in the group was helpful, because they drew on each other's confidence, because these were women who, at the very least, know each other. They spend quite a bit of time together, and so it increased their ability to be able to negotiate. And so we saw a number of effects, and I've put an asterisk there because there were a number of different things that we tested that led to these results. But in the focus group discussions that we did with the women and the men, and I will show examples of that in a bit, they specifically said that having marketing committees that they made up of members that they knew helped with, helped them with these results. So you can see these are all women's results. So women, the percentage of women reporting that they had access to output markets, and this related to the end market. So this is they are the exporters. as opposed to the middlemen that they usually sold to, moved from about 35.7, from under 30% to just under 60% by end line, and this is a time span of about 3 years. On the other side, we had a percentage of women that were selling in bulk, and this naturally fetched higher prices. We had that shoot from under 10%, about 5.7%, to just under 40%. I think it was another 35.7. So we had a 30-point increase in the number of women that were selling in bulk as opposed to the baseline 3 years before that. What you don't see here is also the price. So on the end line, the dark orange one, on that year, the women that sold, farmers who sold as individual sellers for sesame, for example, sold at between 1,700 to 1,800 shillings per kilo, whereas for the women that sold in bulk under marketing committees, they attracted a price of between 2,000 and 2,400 per kilo, which is quite significant. So some of the conversations that we had with men and women about what they felt marketing committees did, and this is a quote from a woman who said, having, first of all, the marketing training, but also having the skills to bargain, increase their chances of getting buyers who would buy at a good price. And aggregation meant that buyers were coming to them to buy the crops because they have the bulk, whereas selling as individuals meant they had to transport their crops to the market, and with the issues with infrastructure, that was a bigger challenge. This was from a woman. A man who was a village leader actually talked about sort of the broader changes that they saw. So not just about being able to market things. He said that men were the ones who were responsible to find buyers, but they're seeing changes in that, and the communities are, embracing that change, and that building sort of a trust and raising this equity between men and women on how they handle production and sale of crops. So some of what does this mean, maybe just briefly on the access and use of financial services. What we've seen, we started with this methodology in southern Tanzania. We've rolled it out to the southern highlands in Iringa, where we are now working with a private sector buyer who is working directly with marketing committees. So from the beginning of the season, they agree on prices, they agree on sort of where on collection points, and now there's conversations about inputs, so provision of inputs through these marketing committees, as well as conversations around input loans or for groups that they're able to pay across through the year or at the end of the season after they sell. Another conversation is around clustering marketing committees together to find broader markets outside their own villages, and these are conversations that are happening independent of sort of CARE's work. So this is something the communities are pushing for themselves. So very briefly, because I don't have that much time, just talking about what that meant. So it's a chicken and egg situation. A shift in mobility, in understanding about women mobility, led to women being able to participate in this market, in marketing or sort of sale of their produce. But at the same time, being able to see women be able to do it fed back into that cycle and shifted even more, men's thoughts or communities' thoughts about mobility, and not just for economic activities. As we can see here under the indicators, it changed the view of women being able to move freely across different sort of outputs, going to visit healthcare providers, taking another income-generating activities, moving outside the village. So the mobility shift is not just, while it was led by an economic activities, the shift went across different sort of areas, social areas as well. And so this was to that same feeling. We talked to marketing committee members, and this was a focus group discussion of both men and women. And it's interesting that they talk of this shift on a broad perspective. Changes in economic status has led to more conversations within the household. I think Nisha touched on it at the very beginning. There's some changes within gender discrimination because of the conversations leading to, they're leading to changes within, the dynamics within the family on household decision making and finances and other areas as well. And creating that open platform for conversation as well. So this is where I'll stop, I think, just to make sure that people have time to ask some questions, because I can see some in the chat box as well. So thank you.
Thanks, Maureen. Thank you, Maureen, Christabel, and Emilio. We're now going to move into the Q&A part. I already have a series of questions that have been sent in. If there's more, we'll continue to answer them. So sort of the two key takeaways that when we were talking about this webinar was female smallholders face a lack of opportunity to diversify crops and livelihoods, and that's for various reasons, including a lack of access to finance, but also underlying normative barriers. And then they tend to use informal services more than formal, but there seems to be a demand for formal financial services. And the question now is, how do we actually address this demand? So in terms of question and answers, I have a few. I'm going to start with one that's a really simple one, which is a clarification for Maureen. It says, can you please clarify the number of participants who were part of the CARE project? Maureen, you might be muted again.
I keep getting muted, sorry.
Okay, sorry.
So in this particular project, we worked with about 6,594 women. In one project, as I said, we were operating two parallel projects. So on one hand, and the other one had about 5,900. So about 13,000 altogether.
Thanks. That helps. Emilio, I'm going to point two questions towards you. The first one is around how might the analysis of financial inclusion of women in Tanzania and Mozambique apply to the other countries? Would you advise certain core elements are similar? How can this information be taken to other contexts? And sort of related to that is, we see in a number of studies, reports recently, female smallholders prefer savings over credit. Is there quantitative justification to that from your work? And is this preference specific to female smallholders, or is it all smallholders, both men and women, because savings is the less risky option? So if there were appropriate products available, would everyone prefer those?
Thank you. Yeah, in terms of the, how generalizable are these conclusions? That's always a challenge to predict. But basically, what we're finding is that the evidence that's coming from the national surveys, which are nationally representative of smallholders, tend to coincide very well with most of the literature on women and agriculture coming both from Latin America and South Asia, where you see indicators of lower productivity, indicators of lag in education, indicators of lag on access to formal financial services, and of course, with not the same nuance as we were able to see with the national service that CGAP has done. So that hints that maybe some of the messages that we've been saying may be are quite generalizable. This let's say, diverging path where the financial inclusion gap widens as wealth improves within the smallholder households. But when it comes to the features of the financial products and the tweaks and delivery strategies to develop, those are not generalizable because they come from a much smaller sample, like the financial diaries is. But it just gives you a hint of what kind of difference you should be careful in looking for in terms of goals, in terms of timing and delivery of the product. In terms of the second question about whether female smallholders prefer savings over credit, and whether some other evidence is suggesting that this is generalizable for both men and women who tend to, smallholders who tend to prefer savings. I think this is less generalizable than most, again, related to the financial product part, because it's much more context specific. Within the smallholder financial diaries in Tanzania and Mozambique, we find that on aggregate, that particular sample, more women were using savings and more men were using credit, meaning women were using savings more than men and men were using credit more than women. Now, the nuances of that is not so easy to disentangle, because you really need to get an idea on that particular sample. What are the, let's say, their ability to cope with risk and manage risk. I think that the risk factor is a determinant there. If women or men are better, let's say, suited to manage risk, they may be inclined to prefer credit products. It may also be related to the type of what they want to use the financial service for. Is it for investment or is it just working capital? And normally for investment, you need bulkier kind of sums of money, which would, probably incline you to ask for credit. But if you don't have it, then you might need to restrict yourself to savings and then postpone some of the investment opportunities. So that is a little bit more mixed. But overall, that's why we raised the question. You need to look deeper. Is it a real preference for savings? And if it is, you can focus on developing more convenient savings products for women. But if it's the result of a lack of, a suited credit products like longer term credit, then you might want to focus on those, and you'll have to look at the context to define that.
Great, thanks. Hopefully those answers are satisfactory. Sort of building on that last point that Emilio mentioned, Cristobal, I have a question for you, because you're working now with financial service providers. The question is around how do we make insights like these, where we know that there is a mismatch between the term structure and what the client wants. How have you had those conversations with financial service providers? Where do you see their challenges in getting them to address some of these needs?
Sure. That's a really good question. I think the biggest challenge that we've seen is essentially a lack of a belief, whether it's perceived or real, that women, smallholder farmers, cannot be a viable market segment for them, for the banks or the telcos who are providing credit, for example. Mm-hmm. And so the conversations we've had to have are around, is there even a market to begin with? And so it's a mix of the insights, yes, but being able to show them, here's why there's a market here. One of the ways that we've been able to do that is, for example, as we're doing research with the VSLA groups for care in somewhere in Livingston. As we were doing, we did research, and then we came to the service provider saying, this is actually the volume of cash that is flowing through these informal channels. And suddenly they were able to listen, because it was actually a significant amount. The payout would be in the upwards of about $6,000, for example, at the end of the year. And so I guess in summary, the challenge has been that service providers simply don't look at women smallholder farmers as a viable segment. That's one. And then it's a little bit unclear as to how to reach them. And so we've had to tailor our conversations around, here's why there's a business case here, going as far as actually doing the math, doing the financial projections to say, if you target this number of women with this kind of products, here's how it looks like from a financial standpoint. And then secondly, going beyond that to say, we're not saying develop a unique product for women smallholder farmers, because maybe that is a harder sell for them in management. It's actually saying you have a mass market product, or you want to design a mass market product. How do you tailor the messaging? How do you pick the relevant channels to allow you to actually reach women smallholder farmers? So I think in summary, it's understanding that at the end of the day, for financial service providers, the thing that moves the needle for them is the bottom line, and does it break even? Does it make commercial sense? And so we've had to play into that. It makes commercial sense because here are the numbers, and then 2, here's how you can do it. And 3, we're not saying just design a product for only half the population. We're saying design a mass market product and then tailor the marketing and the channel approaches for women smallholder farmers. That's been an interesting, I think, journey in and of itself. It takes a lot of time to just even get them to start listening when you bring up the gender component. But I think over time, for example, in the Zambian market, where 51% of the population, it doesn't make sense to ignore that segment simply because it's a harder segment to target. It makes more sense to look at it from, if half of your customers are in this segment, how do you target that segment? Yeah, so that's how we've been trying to approach it.
Great, thank you. Amelia, I have one more question for you. In your research, do you see, in terms of the expansion of mobile money in Tanzania, if that has led to an increase in women's uptake of credit products, or is it still limited to sending and receiving payments?
Yeah, thanks for that. Yes, we did look at that, I mentioned, and what we found is that there is a very similar lag in terms of the use of digital financial services between men and women as the wealth levels improve. So the biggest lag happens in the wealthier families, although both a much lower share of both men and women use mobile money. The main use is P2P transfers, but one particular aspect that we find is that, well, overall, there's very few men and women who use digital financial services relative to other types of financial services, like those coming from banks, microfinance institutions, and the informal sector. But what's interesting to note is that in Tanzania, more men than women have own a mobile phone of their own. Right? So there is a gender gap in terms of mobile phone membership in Tanzania. But if you compare it to Mozambique, in Mozambique, there isn't that difference. Statistically speaking, the same amount of men and women in smallholder households own a mobile phone. However, when you look at access to digital financial services in both countries, there is a gender gap in the use of DFS, meaning that, you know, merely owning a mobile phone is not the root constraint of women using it to access financial services.
Okay, great. Thanks, Emilio. I just realized that we have 2 minutes left. So while we do have a few more questions, what I'm going to do is ask the speakers to respond to it, and maybe we can send it out with the recording. What I want to give a minute to each one of the speakers, maybe to add any final thoughts based on the questions that have come up, and, you know, sort of one key message that you'd like to share with the participants who are online. So we'll start with Amelia.
Very quickly, I mean, the upshot, I think using a gender lens is important, an important practice in everything we do when we try to promote financial inclusion among smallholder families. And also that will certainly push us to think beyond financial services, because in this particular segment of the population of smallholders, all of those dynamics related to social norms that affect pretty much all of the livelihoods, the non-farming and the farming livelihoods, are really, really important and determine that the women's willingness and ability to access formal financial services.
Thank you. Christabel, you're muted. You might.
Sure. I think from my end, I'll probably talk about what it takes to work with private sector actors. And I think what I'm finding is that it's not necessarily a lack of willingness per se to engage, but it's a bit harder to figure out what women smallholder farmers want. And once you figure that out, how do you even reach them? And so even as we're engaging with private sector actors, really trying to understand, to approach the service provider as you have a product, you have different segments that you want to target. Youth is one of them, women is another one, rural is another one. How do we think through the different strategies to help you reach those populations? And I'm finding that that is moving the needle a little bit better, because they then see that we're trying to actually work with them to find a business case that makes sense for them, rather than approaching gender as a CSR initiative for them.
Thanks. That's an important message. Hopefully there's private sector actors listening. Maureen, you get the final word.
This is the one part. It's not great to come last because everything has been said. But just to echo on how we need to be more deliberate about putting women on the forefront and think beyond the general market if we are to have more women's participation. And I think there was a comment on that in the chat box, in that as we're designing tools, so for example, as we're designing technology-based tools, with Emilio's point that men own more mobile phones than women, given that men do most of the selling than women. So as we're designing products for markets that are using mobile phones, are we thinking about how this reflects on women's participation in these products? So, but conversations like this or introspection like this needs to continue happening, not just within the promoter space, but including other actors as well.
Great. Thank you so much, Christabel, Emilio, and Maureen, and thank you to everyone for joining us. As I said, we will be sending out the recording and materials, and any questions we didn't answer, you can access the CGAP brief on the CGAP website, and have a good day. Thanks. Bye.
Thank you.